Talk to me about the $420 a share price. We spoke with an analyst from Instinet earlier. He said, his price target really at $450 makes sense. In the blog post, Elon Musk says it's only a 20% premium to our share price following our second quarter earnings call. How do you get to $420 a share? Is that a fair valuation according to your models?
Well, we've got a target price of $250, so we don't have the same view.
Wow.
I think our issues are, we can see Tesla becoming more profitable and even cash generative. What we struggle to see is how they can actually fund the growth that is implied in the valuation. Right now, first, we don't know exactly what the underlying demand for their vehicle really is. And then we don't see how the cash flow right now is sufficient to fund the growth of Model Y, potentially the semi-truck, and the new capacity that goes along. So it suggests to us that you need more capital to fund that growth, and that's what stops us well below the 420 target price that is implied in Musk's comments.
Well, Philippe, what would actually justify, though, Tesla even looking for any sort of a premium in a buyout, considering all of the issues that you just laid out? And I'm also curious as to what you think about the communication strategy that Musk continues to take, where he seems to circumvent some of the more standard ways of communicating with shareholders.
Yeah, I mean, we should be ready by now, or prepared by now, to see all kinds of unconventional measures and management style from Elon Musk. The question, of course, is, at one point does a regulator look at that behavior being outside of the normal bounds of legality? And but I think we shouldn't be surprised by his comments at this stage, because we've heard so many of them. And to be fair, we've heard him complain a number of times that Tesla should not be a publicly listed entity.
To go back to what Romain had mentioned as well, what do you think that Tesla deserves a premium? I mean, 420 is a long way from its current 367, and certainly even farther away from your price target of 250.
Yeah, I mean, for us, we're going to go through a phase of between 2 and 5 years where Tesla is going to need much more capital. And Musk has kind of boxed himself in a situation where he refuses to raise equity. I understand that he doesn't want to raise capital in a distressed situation. But at the same time, we look at the financial performance, the outlook for growth has been insufficient to fund the growth of the business. So he is in a situation where I think he needs capital to fund that growth and aspire to that premium valuation. We think that because of the vertical integration of Tesla is probably going to be, for a number of years, a relatively low margin and low return on invested capital business. And so what keeps the valuation at a high level is the expectation of growth. And right now the problem is, one, we don't necessarily see in the current development of the business or the order book of the Model 3 that there is that much growth. And two, we don't think that Tesla has actually the financial capability of funding the growth that is implied in the valuation. And that's where the whole story for us doesn't support the current, the 400 plus share price.
Right. So when you talk about that, what immediately comes to mind to me is free cash flow. I mean, massive negative free cash flow, $3.5 billion. I know on the second quarter earnings call, he had talked about trying to turn that around by the end of the year. But it is a lot of volatility. And I think some analysts and maybe some of the investors today have even wondered, should they be a public company, given all the volatility, not only on the finances, but also perhaps maybe from some of his tweets? Are they better off as a private company?
Yeah, I think right now it looks like in the next few quarters it becomes a viable company because they generate sufficient cash to basically pay the bills. What they do not have is the cash flow generation, we think, to fund the growth that supports the multiple. And that's the situation at this stage. Either they remain a public entity and raise a lot of capital, which Musk said he doesn't want to do, and that would be dilutive, or they find a way of going private, in which case they can do that privately without the eyes of the market on them, and without having to suffer potentially high volatility as they go through the difficulty of funding the growth.
And I just want to remind everyone that we have about 5 minutes to go before Tesla shares resume trading. They were halted about an hour and a half ago after Elon Musk tweeted that he is considering taking the company private. I wonder, Philippe, what needs to happen before a final decision could be made on whether Tesla will be taken private? Does the company need to meet all of Elon Musk's goals, such as becoming profitable in the second half and getting to positive free cash flow, for instance, in order for a deal to be taken private to be completed or to even be possible?
Well, I think at this stage we need to see that the funding is in place to actually make a bid for the company. I mean, we can be reasonably confident that a large number of the shareholders will be happy to continue to be investing in Tesla and basically remove themselves from public equities. They will lose some liquidity, but it will also get rid of some volatility. What we don't know is the 50% or so of the market that is kind of free float and may decide the 420 is too good a price to pass, in which case we need to see how much funding is really available, how much commitment there is for funding taking Tesla private, but also funding the investment to reach the higher level of growth that would eventually support the valuation and potentially also support a relisting of Tesla a few years down the road when they have reached a higher level of activity.